So, welcome, my sweetie people in this amazing session where we are going to cover our newly introduced theory topic, that is professional and ethical duty of a chartered accountant. Sir, what is professional ethics doing in FR? Even I don't know. Even I'm searching for this answer, but I have the answer actually. So, first of all, I hope my audio is absolutely amazing. And I hope every one of you is also doing absolutely amazing. Okay. So, why this topic is there in FR? So, basically, what the institute wants from you is when you study multiple subjects, they want you to interlink them. For example, if you are working in a company, okay, so when you are reviewing the financials, you might identify some mistakes. Okay, let's say there are some mistakes which are done by the chartered accountant intentionally. So first of all, what is the mistake in that accounting treatment? First thing. Second thing, you will be guilty under which schedule, or which you can say part, or which ethical principle you're violating. So that interlinkage is required. That is why you will see that many subjects will have this topic of professional and ethical duty of a CA. Okay. So of course, I'm not a master of audit. I'm a master of FR. But so what we are going to do is, we will first understand what is the overview of this topic. So before you are doing this topic, you should know professional ethics of audit. Okay. I'm assuming that you have studied audit. Okay. But still, what we will do is we will go through the relevant concepts of professional ethics again in this video. Okay, so let me tell you, as we all know that there are two schedules. Okay, first schedule, second schedule in professional ethics. From FR point of view, only second schedule is relevant. Okay, first schedule, we know when you study audit, you will know what are the clauses and everything. But what is relevant from exam point of view in FR is second schedule. And that also in second schedule. Not every clause is important for you. Okay, but still, whatever is the relevant clause, we will go through it once. And apart from that, you also know there are some fundamental principles, five, that is confidentiality, objectivity, integrity, professional behavior, professional competence, and due care. Those five. Okay, so those five fundamental principles also are important from FR point of view when you are answering the questions. Okay, so these things are important. Now, what we will do is we will go through every relevant concept once. Now, sir, you will teach audit. Ha, I will teach audit also. I will teach AFM also. I will teach everything. Ha, sir, this is nice. I like it. So, what we will do is, I have requested our lovey-dovey Shubham Keswani sir, who teaches audit, to just help us with the overview of these relevant concepts which are relevant in FR. So, from now, this video will get over and Shubham Keswani sir will take it over. Okay, he will give us an overview of the relevant concepts, and then what we will do is we will go through all the questions of this chapter. Okay, so as I said, the second schedule, these five fundamental principles, Shubham Keswani sir will give an overview. Apart from that, there is some more theory which I will discuss. Okay, so now let Shubham Keswani sir take over. He will give you the overview of everything which is required, and then you will see me back again. Okay, so enjoy Shubham sir's lecture. Till then, tada, bye bye.
So hello, what's up? I hope all of you are doing great. Welcome to the ethics part. I am Shubham Keswani. I'll be taking this ethics part for you. So generally we cover this in the audit subject of CA final level. The name of the topic is professional ethics. So selected topics of professional ethics are applicable for your FR paper that I'll be covering for all of you. Are you people ready? Yes, sir, we are ready. So the first thing that we are going to cover right now is the fundamental principle. Fundamental principles, or you can say these are the qualities. These are the qualities which should be there in every chartered accountant. So soon you will be chartered accountant. So these are the qualities you need to consider. Sir, what are these qualities? We will go one by one. First one, let's take confidentiality. C for confidentiality. Sir, what is confidentiality? Confidentiality basically means whenever someone shares something with you, whenever someone says share something with you, you should respect it. You should not share with anyone else. So we have this habit of taking the screenshots and sharing with our friends. Yes or no? Yes, sir. So avoid that, because that is not a proper thing. That is not the right quality. You should respect the confidentiality. Sir, here confidentiality of information of whom? Information of your client, in case you are serving a client as a CA in practice, or your employer if you are CA in service. So it says respect the confidential information which you are acquiring as a result of your professional or business relationship. Then what are these points given? See, sometimes we don't want to disclose. Sometimes we don't want to disclose, we don't have the intention of disclosing. But while talking only, we sometimes share the information by mistake. So it says you can do some inadvertent disclosure. Inadvertent means by mistake. By mistake, you may disclose some information in a social environment. You are with your friends. So be alert to that inadvertent disclosure in a social environment, to your close family members and all. You understood the point or not? Yes, sir. Plus, maintain the confidentiality within the firm or employing organization. Yani, if you are a CA in practice, you should not share the information with others in the firm also. If you are working for your employer, you should not tell the other employees also, even if it is a prospective client, not your current client. Not your current client or prospective client, then in that case also you should maintain the confidentiality of whatever information they have disclosed to you. You got the point? Yes, sir. Plus, not only within the firm, also maintain confidentiality outside the firm. Don't share with anyone else unless it is a legal requirement or it is a professional duty to disclose. Also, sir, you know what? As an auditor, we do audit of many listed entities. Yes, sir. These listed entities shares are listed on the stock exchange. So if I know before that the company will be disclosing very good financial results, I know before that the company is going to declare very good financial results, so I can buy the share. And when the results are announced in the market, I can sell the share. Sir, it is using the information for personal advantage. Can I use my client's information for personal advantage? Answer is no. You cannot do the same. So don't use the information for personal advantage, and also not for the advantage of any third party. Got it? Got it, sir. And remember, even after the relationship has ended, don't disclose that information with anyone else. I hope you got the point. Got it, sir. Now tell me one thing. There are certain exceptions. Like every law, here are also certain exceptions. These exceptions also you need to understand that in certain cases, you might be required to disclose the information. For example, let's say it is a requirement of law. Sir, can you please help us with an example? Obviously, in your CA Inter, you covered a section called section number 143 subsection 12. It said that whenever you notice that in the company there is a fraud by whom? Fraud by the employee or fraud by the officer of the company. Employee or officer of the company against the company. Employee or officer of the company against the company, and remember the fraud amount is 1 crore or above. The fraud amount is 1 crore or above. In this case, Baba, you were required to report the fraud to central government. You are required to report this fraud to whom? Central government. Then the time limit I think was given for 60 days. 60 days ke andar you are required to report this fraud. So tell me the one thing, if I am reporting a fraud of the client, am I going against the confidentiality? Answer is no. It is a requirement of law, so this exception is valid. Got the point? Yes, sir. Now let's say your client wants to take a loan from a bank. Oh, now when I want to take the loan from the bank can ask for the client's information, and the client has authorized me. Client or employer has authorized me to share the information, and even law is permitting to share the information. So is there any problem? Logically, the answer is no. So the 2 points are very easy. Required by law, permitted by law, plus it should be authorized by the person whose information it is, either your client or your employer. Got it, sir. Then there are 4 cases where it is a professional duty or right to disclose. Sir, what are these cases? So I call these 2 are called pyare cases. Sir, what is pyare? Cute, easy ones. Like in those cases, strict provisions are not there. So what are the pyare cases? P for pyare, P for peer review, quality review. Sir, what is a peer review? As per the provisions right now, you cannot do an audit of a listed entity. You cannot do an audit of a listed entity unless you have a peer review certificate issued by ICAI. So what does ICAI do? They send some person. And that person checks your working papers. That person checks your audit documentation, whether you are doing the audit properly or not. If you are doing the audit properly, they give you a peer review certificate. Similarly, central government has a quality review board. Then the people also send someone to check your audit engagement. So whether it is a peer review, quality review, they will check your audit documentation. So can you disclose the information to them? Answer is yes. It is a requirement, you can. Okay, sir. Now what do they check? They check that whether you are working as per the standards or not. So please consider this point also to comply with the standards on auditing, which you call them technical and professional standards, including the ethical requirements. Sometimes you may be required to disclose the information. So what are the pyare cases? Sir, pyare cases are very simple: peer review, quality review. So if someone wants to review my work, I will have to share the work with them. What will they review? Whether I am complying with the technical, professional standards or not. Easy, easy, sir. Sir, you said that there are two harsh cases also. There are two harsh cases also. So the harsh cases are this one: when there is an inquiry or investigation by a regulatory body. For example, you must have heard about NFRA. Have you heard about NFRA? Yes or no? Yes, sir. So have you heard about the investigations also? So let's say NFRA has launched an investigation against the client. Now, when they have launched the investigation against the client, they also want to check your working papers and documentation, whether you have done the audit properly or not. So if there is some inquiry or investigation, you might be required to disclose the information. Similarly, if after the investigation there is a legal proceeding against you, even in that proceedings you may be required to share your information. So these are the circumstances where you may be required to disclose the information. Let's quickly revise. First one was requirement of law. Second one was permitted by law and it has been authorized by the client or employer. Then 4 special cases, 2 pyare wale cases were there and the other 2 were little harsh ones. What were the pyare wale cases? Peer review, quality review, comply with the standards on auditing and all. Okay, sir. And the last 2 were inquiry, investigation and legal proceedings. In these cases, you may be required to disclose the information. Easy? Easy, sir. Here your confidentiality part is over. Here your confidentiality part is over. I hope you got good understanding of this topic. Now comes, sir, the next quality, which is called objectivity. Now, sir, what is objectivity? Objectivity basically says, as an auditor, as a chartered accountant, your professional judgment. What is professional judgment? Your decision making. Whatever is your professional or business judgment, that is your decision making. It should not be affected by 3 things. It should not be affected by 3 things. Sir, what are these 3 things? Your BC. First of all, your BC or undue influence of others. Undue influence of others. These 3 things should not affect your decision. So make sure your professional or business judgments are not compromised because of your own BC. Sir, what is own BC? Own biasness. You have your own biased attitude. Your own conflict of interest with the client. You might be holding some shares and all. Or undue influence of some other party. Okay? So basically your decision should be free of any undue influence. Clear or not? Yes, sir. So this is all about objectivity. Very easy. Now, sir, let's talk about integrity. Integrity means you are not dishonest. You are not dishonest. So basically you are very straightforward. You talk clearly to the point and you are honest in whatever things you do. Okay? Plus you are never associated with the information which contains. Remember in English your teacher used to teach error and omission. Haan sir, error and omission. So error and omission should not be there in your reports. So never be associated with some information which is materially false or which has been provided negligently. That means recklessly or without following the due procedure, or it is omitting the required information. So these are the basic things you need to consider. Integrity is basically Shubham sir. Very, very straightforward, to the point, very honest, never lie. Okay, this is the line. And last point is never associate with information which contains error or omission. Error means materially false or omits the required information. Clear? Clear, sir. So 3 qualities are done: confidentiality, objectivity, integrity. Now the last 2 qualities are professional competence and due care. Professional competence and due care basically means you should be competent. Sir, what do you mean by competent? See, being competent means not only you are required to pass the chartered accountancy exam, you have to attain the knowledge, but also be updated with the amendments. Also be updated with the amendments. That means you also need to maintain. So attain and maintain the knowledge and skills so that you are able to give competent professional services to the client. Got it, sir? Plus, what do you mean by due care? You need to act diligently. You need to do your work by following proper procedures, proper planning, That means your work should be done very properly. It should be done as per the standards. Okay? And it should be done on a timely basis. So these are the two things which I feel you should just focus on. What is the first thing? Competence. Not only attain the knowledge, but also maintain the knowledge. Got it, sir? What do you mean by due care? Act diligently as per the standards on auditing and all, and do your work on time. You got the point or not? Yes, sir. Now comes the last point that I feel you should know, that is professional behavior. From the FR point of view, whenever you find that the CA employee, he is not doing the work as per Ind AS. So can I say he is not following the law regulation? Yes, sir. So whenever you feel a chartered accountant is not following the law regulation, or he is doing anything which can discredit the profession, which can affect the name of the profession, you will say that it is a professional behavior issue. It is somewhere a professional behavior issue. That is what I feel should be enough. So what are the 5 qualities? Let's quickly summarize it. Sir, these are the qualities which should be there in every professional. Koi bhi professional is there. Write with me. Koi bhi professional is there. That professional should have these 5 qualities. C means confidentiality. O means objectivity. I means integrity. Professional means professional competence and due care. And last one is professional behavior. Clear? Clear, sir. Confidentiality means respect the confidentiality. Objectivity means your decision is your decision. Your professional judgment should not be affected by 3 things. Your own BC. BC means biasness, conflict of interest. Got it? Got it, sir. Or undue influence of some other party. I for integrity, like Shubham sir, straightforward, honest, sincere. Okay? Don't associate with any information which is materially false or omits the required information. Competence and due care means attain and maintain the knowledge. Okay, sir. Act diligently. Behavior means follow the law regulations and don't do anything which can discredit the profession. Don't do anything which can discredit the profession. Gotcha? Gotcha, sir. Now I think this is enough. Now let's move to the schedules. Sir, what is the schedule wala part? So Baba, this thing we cover very much in detail in auditing. Whatever is relevant from FR point of view that Akash sir has told me, I'll be teaching you that. Okay, sir. So in FR point of view, first of all, the first schedule is not relevant. Okay? So I'm ignoring it. In the second schedule, what is relevant for you is part 1 and part 2. Okay, sir. What does part 1 focus on? It focuses on the CA in practice. As I told you, as a CA, you have option either you practice or you work as an employee. So if you are a CA in practice, there are around 10 clauses. Out of these 10 clauses, some relevant clauses are there, which I will discuss with you. Then there is part number 2. In this, there are 4 clauses. Out of these 4 clauses, only 1 clause is relevant that I'll be focusing in this lecture. Are you people ready? Yes, sir, we are ready. So part 1 and part 2 talk about professional misconduct. Part 3 says other misconduct. Sir, what is this other misconduct? Just for your general knowledge. In case a CA is sent to jail, if he is imprisonment for more than 6 months, he is guilty under part 3. Very, very easy. Okay, sir. Let's begin with the second schedule. And in this second schedule, let's focus first of all on clause number 5 and clause number 6. Sir, what does the clause 5 and 6 talk about? Quickly open your notebook. Whatever notebook you have maintaining, just open your notebook. Okay, sir. We are on which part? Part number 1 of your second schedule. Which act? Chartered Accountant Act 1949. Okay, sir. In this part 1, 2 clauses that we are focusing on are clause number 5 and clause number 6. Sir, what does clause 5 and 6 talk about? Clause 5 says fails. Sir, fails to do what? Fails to disclose. Fails to disclose. Disclose what? Disclose a material fact. Fails to disclose a material fact in the financial statement, disclosure of which was necessary. Somewhere this disclosure was necessary to make the financial statements not misleading. To make the financial statement not misleading, when he or she is associated with the financial statements in professional capacity. Somewhere you are associated with the financial statement in professional capacity. Written, sir. What does clause 6 talks about? It also starts with fails. Fails to do what? Fails to report a material misstatement. Oh, material fact and financial statement. यहाँ पे ना write one more thing. I just missed. Known to him. This is important. He was knowing about it, still he failed to disclose. Failed to report. Sir, report what? Report a material misstatement. Report a material misstatement. Again, this was known to him. Known to him that it is appearing in the financial statement. Known to him that it is appearing in the financial statement. Again, he is associated with the financial statements in professional capacity. He is associated with the financial statement in professional capacity. Written, sir. Now, sir, what is the difference? So basically, in both the cases, the chartered accountant in practice has failed to do something. Acha, remember, this clause is applicable to whom? A CA in practice. Okay? CA in practice has basically done what? Sir, here he has failed. Failed to do what? Failed to disclose a material fact. So whenever in your financial statement in FR, some disclosure is missing, you know the notes to accounts which are required as per schedule 3. Whenever some disclosure is missing and it is important for the users to know, plus that is known to the person. That is known to the person who is associated with the financial statement in professional capacity. Now this professional capacity can be as an auditor, as a preparer of the financial statement, any professional capacity. So if you are in this capacity and you know that disclosure is missing, you know that the disclosure are missing and still you are issuing the financial statement to users, you will be guilty under which clause? Guilty under clause number 5. Got the point or not? Yes, sir. What about clause 6? It is same as clause 5. It is ultra same as clause 5, but here you are the auditor. Here you are the auditor and you fail to report a material misstatement. So basically as an auditor, what is your work? Sir, to identify the material misstatement and mention them in your audit report. So if you are failing to report a material misstatement which is known to you that it is there in the financial statement, so you are a bad boy, then again you will be guilty under clause 6. So in both the clause, the difference is mainly between the disclosure and material misstatement. If a disclosure is missing, you know about it, clause number 5. If a material misstatement is there, you know about it, clause number 6. You got the point or not? Yes, sir. So this is what clause number 5 and 6 is given in your book. Got it? Got it, sir. Sir, what is clause number 7? See, it is a general clause. Remember we discussed about the qualities, 5 qualities, koi professional, confidentiality, objectivity, integrity, professional competence, due care, professional behavior. Yes or no? Yes, sir. In that one point was professional competence and due care. Sir, what was due care? Due care meant D for due care. That means act, D for diligently. Act, D for diligently as per the standards, complete your work on time. So if you fail to exercise due diligence or you are grossly negligent in your work, that means you are not doing the work properly, you will be guilty under clause number 7. So very easy, nothing critical about it. Got it, sir. Sir, what about clause number 8? So clause number 8 follows the basics of audit. See what it says. You know the cycle of audit? Yes, sir. Let's revise. First of all, what you perform? Sir, we perform audit procedures. Oh. By performing audit procedure, what do you get? Sir, we look for audit evidence. Okay, sir. Then when you get the audit evidence, what you do? Sir, we form the conclusion. We form the conclusion whether it is sufficient and appropriate evidence or not. Based on this conclusion, we form our opinion, and based on the opinion, we give our report. Yes or no? Yes, sir. But let's say there is a chartered accountant. Let's say there is a chartered accountant and he concluded that he does not have sufficient and appropriate evidence. So do you think he should give the opinion? Answer is no. He should have not given the opinion in case he did not have sufficient information or sufficient evidence. So this is what we are trying to say. Plus, there was one more thing that you studied in CA Inter. When you don't have sufficient and appropriate evidence, and the impact is material as well as pervasive. The impact is material as well as pervasive. So it is generally said that you should not give your opinion. That means you should disclaim your opinion. That means you should disclaim your opinion. So instead of disclaiming, if you are giving an opinion, you are guilty under clause 8. You will be guilty under clause 8. So this is what is written. A CA in practice shall be deemed to be guilty of professional misconduct. Sir, where is this line given? I think यहाँ पे Akash sir has missed it. So every clause starts with this line. I am writing here for you. CA in practice shall be deemed. That means he will be considered to be guilty of professional misconduct. Guilty of professional misconduct if. So this is the first line for all the clauses. CA in practice shall be deemed to be guilty of professional misconduct if he fails. Sir, fails to do what? Fails to obtain sufficient information. This sufficient information is just like saying sufficient and appropriate audit evidence, which is necessary for expression of opinion, or its exceptions are sufficiently material. That means it is both, impact is both material and pervasive. So he should have negate the expression of opinion. That means he should have disclaim the opinion. So this is the field by which you need to consider clause number 8. So till now 5, 6, 7, 8 clause done. Quickly let's revise. I know you forget easily. Okay, फटाफट let's revise. 5 talked about what? You know a disclosure is missing. You know a disclosure is missing. Still you did not point it out. ठीक है sir. You know there is a material misstatement. You know there is a material misstatement. Still you fail to report about it. Clause number 7, you are not exercising. So you remember 7 days we should exercise. Yes. So this is what 7 is all about. If you don't exercise due diligence or you are grossly negligent in conduct of duty, you will be guilty under clause 7. And 8 for sufficient and appropriate evidence. Remember ऐसे. 8 for sufficient and information. Sufficient information. ठीक है. So you will be easily able to remember the clause. Got it? Got it, sir. Now, Baba, I think these much clauses are enough. ठीक है. Now let's do one more clause. Sir, what is the clause that we should cover? This is related to the professional misconduct for the members of the institute generally. Sir, generally means you are working as an employee. You are working as an employee in a company, and as an employee, let's say you are not working properly. You don't exercise due diligence, ठीक है, or you are grossly negligent in your duties, then in that case, sir, part 2, clause number 1 will be applicable. Sir, how come clause 1 part 2 will be applicable if an employee fails to exercise due diligence or is grossly negligent? I'll just show you a document. Give me a second. Yes. So are you ready? Yes, sir. So basically, this is the Council General Guideline, which is the final stage of chapter of professional ethics. Okay, so these are my notes. In these notes, if you see this chapter number 2, chapter 2 of the Council Guideline, it says member of ICI who is an employee, he should exercise due diligence and not be grossly negligent in the conduct of duties. So Baba, what happens if the employee is grossly negligent? What happens if the employee is grossly negligent? So in this case, which clause will be applicable? Sir, in this case, this clause will be applicable. Clause 1, part 2 of second schedule. ठीक है? प्यार से we call it 122. Part 1, sorry, clause 1, part 2 of second schedule. So it says if you contravene any PRG. PRG. What do you mean by PRG? Provisions of the act. That means you have contravened any section of the act. Regulation means there are certain regulation in the Chartered Accountant Act. You have not followed any regulation or any guideline. So can I say what I showed you just now is a guideline? Yes, sir. You just showed us a guideline. So if the employee is not following this guideline, which clause will be applicable? Sir, clause number 1. Clause number 1, part 2 of the second schedule. So it just says if you contravene any PRG, say with me what is PRG? Provision, regulation or guideline. Then in that case, Baba, which clause will be applicable? Clause 1 to 2. ठीक है, ठीक है sir. So I think these things are enough for you. Now Akash sir will carry on the class with you. I hope you enjoyed this part. All things are crystal clear to you. ठीक है. In case there will be any doubt, you can ask Akash sir. I am sure he'll be able to help you out. So thank you so much for participating in this session, maintaining the patience. I hope things are clear. All the best. Keep going. And yes, one thing I would like to say that I say for all the students, do study with happiness. Because when we study with happiness, then only we progress. खुशी से पढ़ेंगे तभी आगे बढ़ेंगे. Keep going.
I hope you enjoyed Shubham Keswani sir's session. So he gave you the overview of the relevant things. Okay. Again, I would just request you to watch this lecture once you have done at least audit once. You will be able to link it in a much better way. Also, when you have done all the indices once, okay, because it will involve application of multiple indices. A relatively simple topic, you can say. Once I have discussed the full theory, all the questions, it will be easy for you. It will be easy to score for you. Okay. What is the weightage of this individual topic? Maybe 4 or 5 marks. Okay. One question and one MCQ might come, or whatever it is. Okay, chalo. So now, as I said, there is some extra theory in part 2. Okay, so I don't think this is there in audit, but I feel this is discussed in the module of FR. So we will just go through this, all the relevant theory. Again, I'm saying we will not do word by word reading. It is not required. You just need to have an understanding of these points because these might be used somewhere down in the questions. Okay, so just let's take the understanding of these full theory points in a easy. It is easy. Okay, just keep on listening to me. You will enjoy it. Okay, then apart from that, there are approximately 10 questions. Okay, so if you see the questions, illustrations, and then they have you can say solutions. See, can you see that solution size is very big? This much theory you won't be able to remember, right? So what I've done for you, only for you, my cutie sweetie people, is that I have prepared a good summary for you. So for each and every question, what is the relevant theory in that and how to present the answer, that I will guide you. Okay, so yeah, you can say that once the topic is over, I have summarized this topic for you. So subsequently it will consume a very less time. Is this clear? Sir, now it is clear. Chalo. So on that note, let's start the discussion of the relevant theory part first, and then we will move on towards the questions. Okay, chalo. Part 2, Chartered Accountant in Service. So basically this is some guidance points for those CS who are in service, who are working or somewhere. Okay, so first point is conflict of interest. So basically this topic says that you should not allow conflict of interest to compromise your professional business and judgment. For example, let's say, have you seen Shark Tank? In Shark Tank, if you see, the judges don't invest in similar companies. Let's say, for example, there is a shark known as Aman Gupta. Okay, he is the co-founder of Boat. So he eventually will not invest in any company which is related to this earphone or something, which is his competitor basically. Okay, similarly, when you are working somewhere, there might be cases where conflict of interest arises. You should not let that conflict affect your service which you are giving or affect your judgment. Okay, let's say for example you go into a job. Okay, you get a job. So now that job is very important. That money which you are deriving from the job is very important. The salary is very important. Now the owner of that company threatens you that if you don't do as the owner says, you will lose your job. Right? So now you are in a dilemma whether to do what is right or whether to do what the owner says. Right? So this is also a part of conflict of interest. So you should not allow that conflict affect your original judgment. Okay, that means you should leave the job. Otherwise, you should don't do as the owner says if he's wrong in what he's saying. Basically, okay. Of course, in real life, sir, we will to compromise anything for money, sir. Chalo, anyways, let's forget real life. We will discuss what actually we need to do. Okay. So conflict of interest. So in this point, first it says a CS shall not allow conflict of interest to compromise professional or business judgment. Now, first, what are the 3 steps involved here? First, you need to identify what is the conflict. Okay. Second, you need to see what are the threats created by the conflict. Okay. So if there is conflict, that is not an issue. But if there is any judgment which is being compromised because of that conflict, that is the issue. So identify the threats created by the conflict. And third point is disclose and take the consent if it is necessary. Okay. Because you are in a conflict, you should ideally see whether any disclosure is required or any consent is required to be taken. Okay, sir, do we need to remember this? No, just understand and move forward. Okay, is this clear to everyone? Understood what is the meaning of conflict of interest? Yes, sir. Next point. if you are a CA in a service, there might be possibilities that you are preparing financials for a company. Okay, so preparation and presentation of any information which you are doing, you should keep the following things in mind. Okay, first of all, you whatever information you are preparing, presenting, you should present in respect with, in accordance with relevant regulatory framework or relevant reporting framework. For example, if you are preparing some company's Ind AS balance sheet, you should prepare as per Schedule 3 Division 2, right? So that is, you are preparing the information as per the relevant reporting framework. Okay, second, you should exercise professional judgment, and when you are exercising professional judgment anywhere, you should see that you are not compromising on the accuracy, you are not omitting anything. Okay, so just make sure you are not omitting anything when you are exercising professional judgment. And also, when you're applying judgment, you should not see what is in your favor. Ideally, you should see what thing which you will follow will lead to fair and relevant representation, faithful representation, what will lead to. Okay, so while applying judgment, just make sure you're not omitting anything. Next, use of discretion in preparing and presenting information. You all know that when we study Ind AS, there are places where multiple estimates are involved, so you will use your discretion. So when you are using your discretion, don't use your discretion with intention of misleading others. Okay, so for example, let's say there is a estimate which you are going to create. Okay, a warranty provision which you are going to create. So the more provision you create, the lesser the profitability, because what is the entry of provision? Expense to provision. So the more provision you create, the more expense you have to book, the profitability will reduce. And let's say your bonus is dependent on the profitability. So what you are thinking is, let's not create the provision only, because if we don't create the provision, profit will be higher, I will get higher amount of bonus. So here you are using the discretion to mislead others. Don't do that. Okay, basically it is not moral, right? Na, you are misleading others only for your personal gain. Okay, sir. Chalo. So first is use of discretion in preparing and presenting information. Whenever you're using discretion, make sure there is no intention of misleading others, or there is no intention of omitting anything. Okay. Second point, you have heard this. Sometimes we rely on the work of others. There is a standard also on this. Okay, relying on the work of others. So whenever you rely on the work of others, just don't cut, copy, paste it. You should verify it by yourself as well. Okay. Third, addressing information that is or might be misleading. So let's say, for example, you are preparing the financials, but the director tell you that you have to report something which you know is not correct. For example, you are doing a sale, but ideally it is not a sale, it is something else. But still the management says to record it like a sale. So you are addressing information that you for sure know that it is going to mislead others. So in that case, don't just do as the director has instructed you to do. Okay. If you know that it is going to mislead others, either you will discuss the same with superior, or you will discuss with PCWG, those charged with governance, or the one who is forcing you, just request him that this is not morally correct. Okay. And once you are done discussing with everyone, if none of them are going to help you, there might be a possibility you might have to disassociate with that company. Okay, so if you read this extract now, if you read any of these paragraphs, ultimate solution is to leave the company. Okay, so first they will be like, first discuss with the person who is let's say forcing you to do it, then discuss with superior, those charged with governance, discuss with the government, or if it is required to report anywhere, just report it. Still, if nothing is working out, leave the company. In real life, sir, of course I won't leave na. I need that job, I need the money. But here they might tell you to leave it. So leave it anyways. So addressing, if it is required to address that information, please address it. And if it is required to disclose somewhere also to the government authorities, disclose it also. Okay. Chalo. Next. So this was the second point. Whenever you are preparing and presenting any information, so I will just summarize it for you. First, you need to present that information in accordance with relevant reporting framework. Second, whenever you are using judgment, it is okay to use judgment, but present all the facts and don't omit anything. In that, whenever you are using discretion, because estimates will involve discretion, your discretion should not be with the intention of misleading others. Second, whenever you are relying on the work of others, still verify it from your own self as well. Third, addressing information that is or might be misleading. If you are addressing any information that you know is misleading, ideally you should not report it in your information, and just try to communicate it to everyone that this is something which is happening with you. Okay. And if nothing works out, withdraw from the company. Very good. Okay. So this was the second point. So first point was conflict of interest. Second point was preparation, presentation of information. Very simple. Okay. Again, I'm saying I'm not doing word by word reading. I just want to give an overview of all these points. Okay, chalo. Also from exam point of view, you need not atrophy this. Even if you want to learn, you can just learn the red points. Okay, chalo. Next point is acting with sufficient expertise. So basically, one fundamental principle is that you should have professional competence and due care. So basically, you should only engage in those work where you have sufficient expertise. Let's say, for example, you are a chartered accountant. So your expertise is in audit and taxation. You can work in that, right? Your expertise is not in coding. Are you getting my point? Okay. So acting with sufficient expertise in the area of knowledge. First point. We shall not intentionally mislead as to level of expertise or experience possessed. Okay, just because you have experience in something, you should not try to manipulate or the information or manipulate or mislead someone. Okay. Second, a self-interest threat to compliance with the principle of professional competence and due care might be created if a chartered accountant has. Sometimes what happens is there might be a self-interest threat which might be created. Now, how this threat is created? If you are performing any work where you have insufficient time for performing them. For example, you have been given a audit of a company that the owner of the company says you need to perform this in a couple of days. Now you know that it will approximate at 10 days, but still because he is saying and he is giving a good amount of money, you have accepted that assignment to complete the whole work in couple of days. Now you won't be able to perform it in a right way. Okay, so if there is a insufficient time for performing an activity, still you accept it, there is a self-interest threat which might be created. Second, incomplete information. So sometimes if you are doing any work, you know that you have incomplete information. So based on incomplete information, if you move on to any judgment, again a self-interest threat might be created. Second, insufficient experience. As I said, let's say for example, you are doing some coding work. Okay, now you don't have experience in that. Still you are accepting it. Self-interest threat. Inadequate resources. Resources includes time, money. Let's say for example, they are telling you to go and do some stock audit. Okay, physical stock verification. But they are saying we will not send you there. You can just video call and see. Okay, so now through video call, how will you do stock verification now? Inadequate resources. So even if you are accepting any such assignments, self-interest threat. Okay, so when you are acting with whenever acting with sufficient expertise, just make sure you're not misleading anyone and there is no self-interest threat that is created. And self-interest threat might be created because of these 4 reasons. I hope this is clear to everyone. Okay, sir. Next point. This was the 3rd point. Okay, don't worry. Once I'm done with the theory, I will revise it once again. Okay. 4th point. Financial interest compensation incentives linked to financial reporting and decision making. Okay. So this example I already gave you. Let's say, for example, you are a CFO of the company. Now your bonus is linked to the profits of the company. So just because your bonus is linked to profit, that does not mean you will manipulate the profits of the company just so that you will receive higher bonus. So whenever there is financial interest compensation incentive linked to financial reporting, you should not try to manipulate any information for a personal gain. Okay, on this we have some questions also. I will go through this once again in the questions. Next, inducements including gifts and hospitality. Now what is the meaning of this? Sometimes as we were articles, some clients used to give us good food. Whenever we used to visit that client, they used to welcome us, and then apart from giving the relevant documents, they used to offer us, what would you like to drink, sir? What would you like to have, sir? So just because they're inducing you into some food, that doesn't mean you will give some inappropriate what you can say information or that food might be able to influence your behavior. That should not happen. Okay, so if they are inducing you with any gifts, or if they are giving you any gifts or meals, free meals, there might be a potential threat which is created. Okay, so ideally either don't accept such meals. Sir, how to not accept, sir? It is for free food, we should never reject. So even if you're accepting, you should make sure it is not creating any adverse you can say effect on your opinion. Okay, it is not getting any threats on your opinion. Okay, just make sure, because see, even we had some clients. Okay, we used to be very happy. Some clients used to call us initially. First they used to give us the menu card of 3-4 restaurants. They used to be like, order something, sir, for yourself. We used to be like, whatever the company is, the staff is very nice, they give us good food. Now that does not mean that you will not check their documents properly or something like that. Okay, just make sure. Okay, so now please have a look here. Inducements including gifts and hospitality. An inducement is an object, situation, or action that influence individual behaviors. Okay, but not necessarily with the intent to improperly influence the behavior. Okay, So just make sure that it is not creating any potential threats even if you're accepting it. And an intent to influence behavior. He shall advise immediate or close family member not to accept the inducement. For example, if they are giving you food so that you don't give any adverse opinion on the report, don't accept the food. In short. Okay. Chalo. So this was the E point. Inducements including gifts and hospitality. Don't accept it if they are if in return they are expecting you to give the decision in their favor. Okay, next. Responding to non-compliance with laws and regulations in case of employment with listed companies. Let's say, for example, you are working with a listed company and you see that there is some non-compliance which is happening. Now, what you should do? First of all, you should comply with the principles of integrity and professional behavior. That means you should ideally try to report those non-compliance in your audit report or ask the management to rectify their financials, okay, or to comply with those laws and regulations which they have violated. Okay, so first ask them. So ideally your duty is to exercise your integrity and professional behavior. If they are not ready to rectify the non-compliance, you should ideally alert the management and TCWG. Okay, so first inform the one who is doing the non-compliance, that is we are exercising integrity and professional behavior. Okay, if they're not ready to listen to you, alert the management TCWG. Okay, so this is the first step. Then now they have bifurcated the responsibilities of all CAs in such cases. Now responsibilities of all CAs. So if protocols and procedure exist, address the non-compliance, consider them in determining how to respond to such non-compliance. So basically, if you are a chartered accountant, you should see whether there are any protocols which are existing in those companies to report such non-compliance. Next, what is the responsibility of a senior chartered accountant in service? So let's say you are the senior in that company. Now your duty is not limited to just reporting the non-compliance and everything. Okay, so you must follow certain steps. That is important. The first is addressing the matter. Okay, addressing the non-compliance. Second is determining whether further action is required. Okay, first is addressing the matter. Second is determining whether further action is required. Third is seeking advice. So first we will address it. Second, we will determine what do we need to do with the non-compliance. Third, if you are not sure, you can seek some advice. Okay. Fourth, determining whether to disclose the matter to an appropriate authority. Sometimes the non-compliance is such that it requires reporting to the authority. So check whether that something like that is required or not. Okay. And last is responsibilities of CS other than senior chartered accountant. So if you are not a senior chartered accountant, in that case, you shall take this to your immediate superior. If the immediate superior seems to be involved, he shall inform the next higher level of authority. If accountant determines that disclosure of the matter to an appropriate authority is appropriate, that disclosure is permitted. So if I want to summarize this, first, if you identify the non-compliance, exercise your integrity and professional behavior, alert the management TCWG. If you are a normal CA, check whether any protocol exists. If you are a senior CA, first address the matter. Second, determine what further action is needed. Third, if you are not sure, seek some advice. And fourth, check whether it is required to be disclosed to appropriate authority. If yes, then do it. If you are a CA other than the senior CA, in that case, inform your senior. If senior seems to be involved, inform someone else. And if you also feel that it is relevant to disclose it to appropriate authority, disclose it. Okay? You need not remember this. Just understand this. Clear? Okay. So this was your point number F. Okay. So basically we have studied point number A, conflict of interest. Point number B, preparation and presentation of information with respect to relevant reporting framework. Then point number C, acting with sufficient expertise. Point number D, financial interest linked to or incentive linked to your financial reporting. Next, inducement and including gifts and hospitality, like our article as I mentioned. Then responding to non-compliance with respect to listed entities. Now there is one more, I guess last thing is there. Yes. G. Pressure to breach the fundamental principles. You know what are the fundamental principles, right? Sometimes there might be pressure on you to breach them. Why such pressure might be created? As I already gave an example. Let's say, for example, you're working in a company. That job is very important for you. Okay, you can't leave that job because on your money only family is running. So sometimes the company might pressurize you that you need to do the non-compliance, otherwise we will remove you from the job. Okay, so what if such pressure is created on you? Okay, in such cases, CA first of all shall not allow pressure from others. Okay, neither he should place pressure on others. So ideally, you should not allow someone else to pressurize you. Neither you as a CA should pressurize someone else. Okay. Then, next thing, discussing the circumstances that might assist you include. So, what are the other circumstances or what are the other guidance which is given? First, discussing with the individual who is exerting the pressure. So, first of all, the one who is pressurizing you, try to discuss it. Why are you doing so? I'm a nice guy. I'm a cute guy. Please leave me. First thing. Second thing, discuss with your superior. If that person who is exerting pressure is not listening to you, discuss with your superior. Then you can also escalate the matter to management, TCWG, or auditors. Okay. Then you will see whether any policy exists for disclosing such matter in the company. Disclosing in line with policies, including ethics and whistleblowing policies. Okay. If nothing above works, consult with some colleague, superior, or HR. Okay. And an action that might eliminate threats concerned by pressure is requested for a restructure, segregation of certain responsibilities and duties so that accountant is no longer involved with individual or entity existing pressure. As I said, ideally, if that pressure is not being eliminated, you should make sure that either you change your department or either you get away from that assignment so that you are no longer associated with that individual who is exerting pressure or that entity who is exerting the pressure. As I said, if nothing works out, leave the company. Okay, so basically that. So now how to remember this? You can take an example of a family who is pressurizing the girl or the boy to marry soon. Happens very frequently with us if at all we have taken multiple attempts. Okay, especially in case of girls. So what to do when the family is pressurizing you? First, discuss with the one who is exerting pressure. So if let's say your mom is pressurizing you, beta get married soon. Tell mom please leave me now. Okay. If mom is not listening, then discuss with the superior. Go to dad, see na mom is pressurizing me to do marriage early. Okay. If none of them is listening, escalating to higher levels of management, go to dadaji, dadiji. Dada means your father's father or your father's mother. Okay, got it, sir. Then disclosing in line with policies, including ethics, whistleblowing policies. So if someone else, now this doesn't work in a family, but in company there might be some policies to report it outside the company, so you can do that. If nothing of this works, consulting with a colleague or superior. If your family is still not listening, you will talk to a friend. Now see na, my mom or dad is pressurizing me to get married early. What will you consult my friend? So you will talk to a friend. Okay. And if nothing of this works out, run away from the family. Of course, you will not leave the family, but this is what it is concluded. So action that might eliminate the threats, that you should ideally take action where you are either no longer associated with the individual or you are or the entity which is exerting the pressure. That means you should run away from the home only and then come back after 2 days. Then your parents will be like, okay, baba, we will not force you to get married. Wow, sir, wow. Understood, sir. So this was the 6th point, pressure to breach the fundamental principles. So there are how many? A, B, C, D, E, F, G. Six you can say concepts are there. Just remember the overview of it. I will just revise it once again and then we will move on towards the questions. Okay. First is conflict of interest. Okay, so as I said, if there is any conflict, first try to identify the conflict. Second, see the threats which are created by the conflict. And third, see whether any disclosure or consent is required to be taken. Next point is preparation and presentation of financial information. Whenever you're preparing any financial information, prepare in accordance with relevant reporting framework and exercise your judgment. Don't try to omit anything. Don't try to mislead anyone with the discussion you're using. Also, if you're relying on the work of others, check it by yourself as well. And if you feel any information is misleading, please either get disassociated for the information and also discuss the same matter with the TCWG management and everyone. Clear? Okay. Next is acting with sufficient expertise. So if you have expertise in an area, don't try to use our expertise to mislead someone. Also, make sure that there is no self-interest threat that is created. It might be created because of insufficient time, incomplete information, insufficient expertise, and inadequate resources. Okay. Next is financial interest compensation incentives linked to financial reporting. If your incentives are linked to your profits of the company, don't manipulate the information of the company just for your personal gain. Next, inducements including gifts and hospitality. If the client is offering you free food and then expecting that you will reward the and you will reward or you will not report the client's non-compliance, then don't accept such inducements. Okay. Next, responding to non-compliance with laws and regulations in case of listed entities. If you are working with a listed entity and you see there is some non-compliance which is going on, what we should do? Ideally, you should first comply with the principles of integrity and professional behavior. That is, talk to that individual, talk to that company that don't do such non-compliance. Then you should alert the TCWG. Now, if you are a normal CA, you should see whatever procedure exists in that company. If you are a senior CA, address the matter. Okay, determine what is the further action which is needed. If you are not sure, seek some advice. Then, if any extra reporting is required to appropriate authority, do that. Okay, then if you are any CA other than the senior chartered accountant, in that case you should inform your senior. If that senior is also involved, you should inform the next higher level of authority. And also you should see whether any appropriate disclosure is required to be made to the appropriate authority. If that is required, do that as well. Next, pressure to breach the fundamental principles. If anyone is putting some pressure to breach the principles, first of all, you should not allow someone to pressurize you. Second, you should not also place pressure on anyone else. Okay, now in that case, how do we what do we do, or what are the assistance, or what are the steps given further? That first, discuss with the one who is exerting the pressure. Second, discuss with the superior. Remember girls boys marriage example, discuss with the first parent. If not listening, discuss with the second parent. Not listening, discuss with father's parents. Okay, discuss with management, TCWG. Then see if there is any other policy which exists for such whistleblowing cases. Then if nothing works out, consult with your friend or consult with your colleague or superior. Okay, and finally you should take action where either you are not involved with that individual who was exerting the pressure on you, or either you are not associated with that company who was exerting the pressure. Okay, so these are the few points which, if you are a CA in service, you should take care of. Of course, this is not you can say any clause or any schedule, but this is a normal conceptual thing. Okay, so I hope this is very much clear to everyone. So I guess you got a good overview of all the concepts, okay, which are there. Overview is sufficient. Your main focus should be on questions. Okay, so there are approximately 10 questions. Even if they form a new question in exam, this will be the question, new question will be around the question which we will discuss. So each and every question is LDR. Okay, but as I already mentioned that because the solution are way bigger, they have given a lot of theory in the solution. Don't worry, I have summarized each and every solution for you. Okay, so whenever you read any question, bifurcate your solution to 3 parts. One is the accounting treatment, one is the ethical issue with the part, and one is what is the misconduct, under which clause are they doing the misconduct, okay, if they follow the non-compliance. So to understand this better, let's start the discussion of the questions. Okay, first question, illustration number 1. Please read with me. Infostar Limited is a listed company engaged in the provision of IT service. Okay, the directors are paid a bonus based on the profits achieved. So how much ever profit you achieve, the more bonus you get. Okay, simple. The draft P&L for the year ended currently shows a profit of 2 CR. So as of now, the profit is 2 CR. That means you will get a bonus only of 2% of the net profit. Now, what is the issue? On 25th March, Infostar sold a land located adjacent to its head office for a consideration of 40 CR with an option to purchase the land back on 25th May for 40 crores plus a premium of 6%. Now, what is happening here? 25th March, you sell something, okay, to a party. Let's say you are selling something to a party, third party. The same asset you will repurchase. After 2 months, on 25th May. Now, you might have heard this. When you sell something for, let's say, 40 CR and you are going to repurchase the same asset after 2 months, is this in reality a sale? No, it is not a sale. Either it is a financing arrangement. Sir, how come? We have studied this in Ind AS 115, sale and repurchase. So whenever you are selling something and you are going to repurchase the exact same thing and you are paying extra on the repurchase, that means you have taken a loan on day 1, and because you are repaying the loan after 2 months, you are going to repay it with interest. Okay, now let's see. The amount received from the transaction eliminated the bank OD of infrastructure as on 31st March 2. On instructions of the CFO of the company, who is a CA, on instruction of the CFO of the company, CFO. Who is a CA? So here a CA is in service. A CA in service because he is the employee of the company, CFO of the company. The transaction was treated as a sale. As I said, whether it should be a sale, no. It should be a financing arrangement. Okay, including the profit arising on disposal in the statement of profit and loss. So now why they want to record this like a sale? Because when you record like a sale, you will book some profit on sale, and if the profit increases, your bonus will also increase. So there is an intention to mislead also here. Now what is required? Discuss the ethical and accounting implications of the above issue with respect to a CA in service. CA in service, referring to the relevant Ind AS wherever appropriate. So now whenever they are asking you a question on this, try to bifurcate your answer into 3-4 parts. Here mostly it will be in 3 parts. Okay, first is the accounting treatment. So here we will apply Ind AS. Next is going to be the ethical issue. Okay, now what if you follow what the company is saying, like if you record it like a sale, then what are the ethical issues which you will violate? And in the last part, the clause in which you are going to do the professional misconduct. Okay, so when Shubham Keswani sir taught you the clauses, you might see they were bifurcated into 2 parts. The second schedule has 2 parts, part 1, part 2. Part 1 is for the CAs who are in practice, and part 2 is for the ones who are in service. So here the person was in service, so we will apply part 2. Okay, and as you might have even Shubham sir might have told you, not all clauses are relevant here. From FR point of view, there are only specific clauses. Like for example, I'll give you the spoiler also. Whenever a member in service violates, it is always going to be clause 1. Clause 1 part 2 second schedule. Clause 1 part 2 second schedule for a person who is in service. Okay, and whenever a person who is in practice violates, it is going to be either clause 5 or clause 6 or clause 7 or clause 8. Clause 5, 6, 7, 8 of part 1 of second schedule. Okay, so for practice 5, 6, 7, 8, either of the 4, 3 might be there, 2 might be there, all 4 might be there. We will see the question. And for a one who is in service, it is always clause 1 part 2 second schedule. I have given a great spoiler to you. Okay, you see all the question, you will find this only. Now how to answer this? So because it's the first question, I will also go through the ICS solution, and I will also give the summary given by me. Then you will understand the value of the summary given by me. Okay, so accounting treatment, if you see, so first you will give the reference of Ind AS 115 because they are telling you to treat like a sale, and 115 already mentioned that it is not a sale, it is a financing arrangement, sale and repurchase agreement. Okay, again do this chapter when you know all the Ind ASs. Okay, so give the reference of 115, tell them it is not a sale in your own words, and then it is a financing arrangement. Okay, so this is the accounting treatment. So tell them what they are violating first. Then what are the ethical issues? So in ethical issues, mostly they talk about the fundamental principles. 5 fundamental principles. Shubham sir might have told you, koi professional, COI, confidentiality, objectivity, integrity, professional competence and due care, professional behavior. So those fundamental principles, mostly in ethical issues, those fundamental principles will come. So here, which one is coming? Here integrity is coming, objectivity is coming. Okay, there is also a self-interest threat which is there. Okay, professional behavior also coming. So I have tried to summarize this: integrity, objectivity, professional behavior, and also conflict of interest. Remember conflict of interest theory we learned? Yes. So these 3 points and conflict of interest. And now which is the professional misconduct here? Because you are a member in service, it will be clause 1 part 2 second schedule. What was there in clause 1, by the way? So in clause 1 we say, if you contravene any of the provisions of this act or regulations made thereunder or any guidelines issued by the council, then you are guilty of professional misconduct. So of course the audit part, the ethics part in this, you might be in a better position to interpret which ethical consideration is coming and which clause is coming. The accounting part, I am the expert, I can tell you much better for this part. Okay, so but whenever I'm discussing, I will discuss all the 3 parts, but please make sure you should be in a better position to identify which fundamental principle is being violated and which clause is being violated. Okay, now also you might ask, sir, why confidentiality is not coming here, why professional competence and due care is not coming here? Okay, so you should be in a better position to interpret that fact. And sometimes you will see that you might feel in some questions that confidentiality can also come. Okay, but still they're not mentioned. It is okay if you mention extra, it is okay, there is no issue with that. Okay, chalo. So I hope I have given a good overview of the fact. Let's proceed now. Next question number 2. All question are LDR for this, please remember. Next question. Rustam Limited, a company engaged in oil extraction, has a present obligation to dismantle the oil rig installed by it at the end of useful life for 10 years. Okay, so whenever there is a present obligation to dismantle, we all know as per India 16, we need to book the provision for decommissioning at present value. Okay, and that provision will be accounted as per India 37 because India 37 talks about provisions, contingent liabilities, contingent assets. Okay, so there are two Indias involved here. 16 and 37 both say that you have to book the provision at present value. Now, the directors of Rustam are aware of the requirements of 37 and 16. However, they propose to expense the cost of dismantling as and when incurred. So they are like, you will incur after 10 years, you book like an expense after 10 years only. Don't book it now. Okay. They argue that the application of India's involved judgment, and although prudence is mentioned in framework, it is only one among the many ways of achieving faithful representation. They are like, India says na involve judgment, so we will use a judgment. Array involve, India says to apply judgment only when India is not specific. Here they have told you to follow something, so you have to follow. You can't apply judgment everywhere. Okay, chalo. Discuss whether directors are acting unethically in above instance, and what should be the practicing CA's course of action. Guys, practicing CA. Practicing means part 1 or part 2. So it will be part 1. And in part 1, mostly it is clause 5, 6, 7, 8. Out of these, only 3 or 4. All 4 might come, 3 might come, 2 might come. Okay, please make sure. So again, we will answer in 3 parts. First is accounting treatment. Second is ethical issue. And third is the professional misconduct. Okay. So in accounting treatment, you will mention which index. So perfect answer will mention index 16 and 37. So index 16 and 37 says that whenever you book a decommissioning, you have to add it to the cost of PP at present value, and on day 1 you will also create a provision. Okay, and every year end you will unwind the same. This you can mention in your own words. You're not expected to write in ICI's language. Okay, you can mention in your own words. Basic knowledge we have given of index. Okay, then what is the ethical issue if you violate the whatever conditions are given? So if you violate, the ethical issue is of integrity, professional behavior, professional competence, and due care. Again, I'm saying even if you write extra, those remaining two, even if you write, it is okay. Next is what is the misconduct here? Because you are a member in practice, clause 5, 6, 7 of part 1, second schedule. You can go through the clause 5, 6, 7 months. Is it okay with everyone? Yes, sir. Chalo, great. Acha, if you have time, of course, you can give a read of the whole solution. But I feel when you are watching this lecture, maybe you are at the back end, you have some less time. That is why I've given this summary to you. Okay, chalo. Let's proceed. Alap Limited's director feel that company needs a significant injection of capital in order to modernize plant and equipment as the company has promised firm orders. Okay. The current lending policy of the banks require prospective borrowers to demonstrate strong projected cash flows. So basically, if you want to take a loan, basically, and if you want to take a loan from the bank, you need strong cash flows, projected cash flows, coupled with debt service coverage ratio exceeding 10. However, the current projected statement of cash flows does not satisfy the bank's criteria for lending. So currently your cash flows, you know that you are not fit to take the loan. Now, the directors have told the bank that the company is in excellent financial position. The financial results and cash flow projections will meet the criteria, and the chartered accountant will submit a report of this effect shortly. Now, what are they doing? So basically, a company wants to take a loan from a bank. The company's financials are not appropriate for the loan. But company is like, don't worry, wait till evening. Our CA will give the proper report. Don't worry. It is like, you know, in Hindi there was a movie Munna by MBBS. I know it was also remaked in your South language. So in that that Munna Bhai wanted to become a doctor. So he went to the hospital and asked the principal or the teacher, what is the minimum requirement of percentage required to become a doctor? So he was like, in 12th standard you should get at least 90%. So of course Munna Bhai did not even give 12th. So his assistant was like, "Arey, don't worry. By evening, I will give you the certificate 95%, 95%." So basically, you don't have the financials required for loan, but still you are like, "Arey, RCA will submit the proper report. Don't worry." Okay, now let's see. So the directors have told the bank that it is in an excellent financial position. The chartered accountant has recently joined Alap. Joint LAP means he is a member in service. So if he is a member in service, if he violates, it will be, of course, which professional misconduct part 2, clause 1, part 2, second schedule. Okay. And has openly stated that he cannot afford to lose his job. Now there is a conflict of interest which is created. Why? Because he has joined the company recently and he has openly mentioned that he cannot afford to lose the job. So the company will try to exploit him now. that we will remove from the job, give the proper cash flow statement. Discuss the professional ethical conflicts which may arise in the above scenario and ethical principles which would guide how the chartered accountant should respond to the situation. So again, bifurcate it into three parts. First of all, what is the accounting treatment issue here? So there is no Ind AS violated here. If you see, taking loan from a bank, it does not involve any Ind AS. Okay, so there is no Ind AS involved here. But yes, you can mention the conflict of interest part, that there is a conflict of interest. So in conflict of interest, we discuss now first identify the conflict, then see the threats, and then disclose it. Okay, so here you will discuss the appropriate action also. So whenever there is a conflict of interest, please make sure we as a CA, you should put the interest of companies first. This is me, put the interest of companies first. You should not see whether you will lose a job or not. You should protect the interest of a stakeholders of a company first. And also you can communicate this inappropriate action to directors also. This is the in accounting treatment, you can write this. Then what are the ethical issues involved here? Integrity, objectivity, professional competence. And if you violate it, it is a misconduct under clause 1 part 2 second schedule, because you are in service. Okay, so mentioning the clause is very simple in case of FR, because we know there are limited clauses which you need to remember. Clear with this? Yes. So this was question number 3. Chalo, let's proceed further. Question number 4. Sunshine Limited listed company is in the cosmetic industry. My God, beauty parlor. Okay, has debt convenience attached to some of its borrowings, which are included in the financial liabilities in the balance sheet. Okay, these convenience mandate the company to repay the debt in full. Okay, if Sunshine fails to maintain a liquidity ratio and operating margin above the specified limit. So basically you have taken a loan from a bank and the loan are conditional. So basically if you violate any ratios or something, you have to repay the loan immediately. Now, the directors along with the CFO of the company, who is a chartered accountant? Now CFO is the chartered accountant. So CFO is a service member. So we know which clause to put now. Are considering entering into a fresh 5-year leasing arrangement. Acha, when you enter into a lease, so when you take anything on lease, so you become the lessee. So when you take anything on lease, what does the lessee record? Lessee records ROU asset to lease liability, right? Now please have a look at them. Entering into a 5-year fresh leasing agreement, but they are concerned about the negative impact of any potential lease obligation. See, when you are a lessee, you book ROU to lease liability. And when you book ROU to lease liability, can I say your liability increases? And your liability increases, it might affect your ratios. That is what they are saying. But they are concerned about the negative impact of any potential lease obligation. Accordingly, the directors and the CFO propose that the lease agreement be drafted in such a way that it is a series of 6-10-month lease rather than a single 5-year lease. So instead of showing one lease of 5 years, you will show 10 leases of 6 months each. So what difference will it make? See, if you know there was an exemption granted for lease accounting, if it is a short-term lease, if it is a lease of less than 12 months, you can avoid doing this accounting and you will do the accounting of normal rent expense to cash bank whenever you keep on paying it. Okay, but that was available only in case of short-term leases. So they are like, we know it is a 5-year lease, but we will draft it in such a way that no one will be able to interpret that it is a 5-year lease. We will draft it in such a way that it is a 6 months lease. 10 leases we will create of 6 months each. Now, see, 6-10-month lease other than a single lease of 5 years in order to utilize the short-term lease exemption. As I said, 116 grants a short-term lease exemption. This would then enable the accounting for lease in their legal form. The directors believe that this treatment will meet the requirements of debt convenience, though such treatment may be contrary to the accounting standards. Discuss the ethical and accounting implication of the above issue from the perspective of CFO. Now what to do? First of all, again 3 parts. First part is going to be your accounting treatment. So again, you will first mention about Ind AS 116. Tell them that in 116, of course, there is a short-term lease exemption given, but ideally this is not a short-term lease, na? It is a 5-year lease. See, you might show it like a short-term lease, but at the back end, you know, na, it is not a short-term lease. So tell them that if it is a normal lease of more than 12 months, you should book ROA and lease liability. Accounting treatment we will discuss in briefly. Then what are the ethical issues? Integrity, objectivity, professional behavior. Okay. Then misconduct, because it is a, what you can say, member in service, clause 1 part 2 second schedule. Simple. Okay, please make sure. Again, I'm just going through the solution in a summary manner. If you have time, you can just give it one read as well. Okay, chalo. Next point. Illustration number 5. What does it say? Agastya Limited is a listed company engaged in the manufacturing of automotive spare parts. The company is preparing the financial statements for the year ended 31st March 13. Directors of Agastya are entitled to an incentive based on operating profit margin. Again, the directors have an incentive linked to profits. And we know whenever there is an incentive linked to profit, they will do cheating. They're like us only Indians. Whenever we have an incentive, we will do cheating, sir. Anyways, you have been appointed as a consultant to advise on the preparation of financial statements. Oh my god, we are the consultant. So basically, we are a practicing CA. Do remember that. Now, on 1st April, Agastya Limited's defined benefit pension scheme. So this pension scheme is normally accounted as per Ind AS 19. Okay, was amended to increase the pension entitlement from 12% of final salary to 18.5% of final salary. Now, if you remember Ind AS 19, whenever we did a plan amendment, due to plan amendment, what used to get created? A past service cost. And if it is a past service cost, we will adjust it to employee benefit expense. It will go in profit and loss. So basically, see, there are two types of amendments. One is a change in assumption. If you change the assumption, then it will be actual gain loss. You will transfer to OCI and R. When there is a plan amendment, it will lead to past service cost. So whatever there is an increase decrease in defined benefit obligation, a past service cost will be affected and you will transfer it to PNL. If you don't remember it, don't worry. When you read Ind AS 19, you will be able to recall it. So basically, it is a plan amendment. Whatever is the increase in your obligation or liability, you will have to transfer it to PNL. Simple. Now, this amendment was due to salary cuts made on the account of pandemic. The chartered accountant has shown such increase in the pension entitlement under the head of employee benefits. So CA has reported properly. CA is like it should come under employee benefits and profit and loss perfect, forming part of operating profit. The directors are unhappy with the presentation. You know why directors are unhappy? You know why? Because if you show this expense in PNL, your profits will reduce. And if profits reduce, their incentive will also reduce, na sir? That is why they are unhappy. They believe that the pension scheme is not integral to the operation since it is paid post-retirement and that insists that such presentation would be misleading. Oh, they are trying to justify their wrongdoing. They are like, "Arey, this should not be the presentation because it is paid afterwards. So why impact the PNL?" Accordingly, directors propose to a change in accounting policy so that all such gains would be recognized in OCI. See, there is a choice of policy when Ind AS is not specific. Okay, here Ind AS has specifically mentioned it is a past service cost, it should go in PNL. So whenever Ind AS says anything, you can't non-comply with them and say we are changing the policy. That is not allowed. Okay, so here you will give a reference of Ind AS 8 also and tell them that you can't change or you can't non-comply just by saying we are changing the policy. Okay, and you will also give a reference of Ind AS 19 and tell them that as per Ind AS 19 this should go in PNL because it is a plan amendment. So that is why even by them they have mentioned 2 Ind AS here. Now, the directors believe that this policy choice would be the consistent blah 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 blah. Discuss ethical and accounting implications. Again, discuss in 3 parts. First is the accounting treatment. So talk them about Ind AS 19. Whenever there is a plan amendment, we say past service cost, it goes to employee benefit expense PNL and not OCI. Also reference to Ind AS 8, change in policy due to plan amendment. So you can't change any such policy. Okay, if Ind AS is available on any transaction, follow the Ind AS. You can't change the policy. Ind AS 8 also says this. If on any transaction any Ind AS is available, blindly follow the Ind AS. Don't change the policy. If Ind AS is not available, then you can change the policy. Okay. Now, what are the ethical issue with this? So there is no fundamental principle issue here, but a CA in practice discovers this issue. He has 2 options. Either report the non-compliance to the superior, to the management, to the TCWG. If none of this works out, you should withdraw from the engagement. Okay, you should withdraw from the engagement. So here they have not mentioned any fundamental principles. They have given choices that because there is a non-compliance, either report the non-compliance. If that does not work out, withdraw from the engagement. And now because you are a member in practice, you will come under part 1. But which clauses? Normally clause 5, 6, 7, 8. Out of that, 6 is not coming here. 5, 7, 8 they have reported, but even if you mention 6, it is okay. Okay, so to be on a safer side, whenever you report extra clauses, it is okay. You should not report less. So let's say if they had mentioned 5, 7, 8, and if you only give 5, 6, 7, then they might deduct marks. Okay, so but if you give extra clauses, it is okay as per my knowledge. Okay, so do remember, but of course if you're precise, it is best. Chalo, so that is the thing here. I hope this is clear to everyone. Okay, chalo, so see, two things you are clear now. First, which accounting violation you are doing, so mention the Ind AS, mention the relevant provision of Ind AS. Second, what is the misconduct about? So if you are in service, clause 1 part 2 second schedule. If you are in practice, clause 5, 6, 7, 8, either of these, part 1 second schedule. Clear with this? So service, again clause 1 part 2 second schedule. Practice, clause 5, 6, 7, 8, either of these, part 1 second schedule. I hope this is clear to everyone. Okay, so till here we have done how many questions? 5 questions are done. Okay, now more 5 are left. Chalo, now we will start from illustration number 6. Let's read this illustration 6. Yes, the directors of Spins Limited are eligible for an incentive computed as a percentage of cash generated from operations as defined in Ind AS 7. Okay, so again it is based on incentive, but this incentive is not on profits, it's on cash flows. So I feel now they will manipulate the cash flows. Let's see. Due to the onset of the pandemic, the company has not performed well and it has in fact lost cash from operations. In order to meet the cash requirements, the directors of Spins are planning to dispose of underutilized equipment and investments which are not subsidies associated, normal investment and equipment. So see, whenever you sell a PPE or investments and you receive the money, is that cash from operations? That is cash flow from investing activity, because when you invest in a PP, it is cash outflow from investing activity. When you sell that PP, it is cash inflow from investing activity. Same apply for investments also. Okay, the directors opine that since the cash generated from sale of such equipment and investments would be used for operations, the inflows on such sale would be presented as statement of cash flow from operations. What people do and what justification they give just to earn that incentive. They are like, when we receive the money, we will use the money in operations only, na? So this inflow is also cash from operations. What to tell them? Take their face closer and give them a small little cute slap. Wrong. Anyways, the directors are concerned about meeting the targets in order to ensure security of their jobs and feel that this treatment would enhance the cash flow picture of the business. The inflow on sale of such equipment investment have potential to make cash from operations figure positive. Discuss the ethical responsibility of Spins Limited chartered accountant who is an employee. That means he's in service. Okay. To ensure that manipulation of cash flows as suggested by the directors does not occur. So here, first of all, what is the accounting issue? It relates to Ind AS 7. Okay, so first mention, as per Ind AS 7, the disposal of PP and investment is not a cash flow from operating but a cash flow from investing activity. Okay, next is the ethical issue which we will discuss, professional competence, due care, and ideally they have not discussed any other ethical issues. You might also mention that integrity and whatever is there, the remaining also you can mention objectivity and everything. Okay, they have also mentioned that whenever you see such thing, you can also inform the auditors. And now what is the misconduct? Because you are a member in service, clause 1 part 2 second schedule, as we already discussed. I hope this is clear to everyone. Okay, chalo, let's proceed further. Illustration number 7. Now this is interesting. Okay, this is interesting now. Chalo, let's read this. InfoStar is a listed company engaged in the provision of IT services. Directors are paid a bonus on the profits. Okay, so again, an incentive linked to profits. Can you see whatever misconduct is happening, it is only happening because the bonus is linked to profits. Anyways, the employee have historically been paid an individual performance-based discretionary incentive. Individual performance-based discretionary incentive. Do you understand the meaning of this? It means, first of all, individual performance-based means whenever an employee does perform better individually, he is given a bonus. But this is not documented. This is discretionary. It is under discretion of the company. If you remember, in Ind AS 37 we call it constructive obligation. Because of our past practices policies, it creates a valid expectation in the mind of the other parties. Okay, so because you are following this from the last 15 years, of course the employees might be in wait of your performance bonus which you are giving as a company. Based on the past trends and performance, the bonus amount for the year would be 3 CR. In view of the possibility of the directors not receiving the bonus on account of the company's poor performance, CFO, who is a chartered accountant, again CFO means he is in service, has suggested that discretionary incentive usually payable to employees could be avoided in the current year. How smart is this CFO, yaar? He's so bad. He's so wrong. He's such a bad person. You know why? He's like the the practice which we are following from past 15 years of paying bonus. Let's not pay it in the current year. Why? See, if you don't pay the bonus, your bonus expense will reduce. And if that reduces, your profit will increase. And the bonus to directors will also increase. This CFO is such a bad person. And morally is so wrong, na? Anyways, let's see. As a part of the annual report, InfoShare reports the employee satisfaction score, staff attrition rate, gender equality, and employee absenteeism rates as non-financial performance measures. The CFO also told the directors that over the mail that no stakeholder reads the non-financial information. See, if you don't give the bonus to employees, of course the satisfaction of employee will go down. So the score of employee will go down. Okay, but this is a non-financial measure, na? So the CFO is like, anyone, any which ways, no one needs that non-financial information data. Leave it, na. Even if the employee is not happy, how does it matter? Morally is wrong. Anyways, let's see. Anyway. And thus aforesaid suggestion of not paying the discretionary incentive would not impact the company greatly. Discuss the ethical and accounting implications of the above issues referring to the relevant Ind AS wherever appropriate. So now, from the perspective of CA, Sushil Bhupati. Now, who is Sushil Bhupati? From where did he arise? Actually, this is the name of the CFO. The CFO's name is Sushil Bhupati. Okay. Anyways, now, first of all, what is the accounting implication here? I don't see any accounting violation here. So there is no Ind AS involved here because it is morally incorrect. See, even if you want to quote a Ind AS, you might quote Ind AS 37, constructive obligation. Okay. Apart from that, I don't see any other Ind AS which can be quoted here. Okay. This is not a violation of your Ind AS. It is a violation of a moral responsibility. See, if you are not paying incentive, if you were in losses, then it's okay. But you are not paying incentive because you want your bonus. That is not correct, na? So how have they answered this? If you see question number 7, if you see the summary, the accounting treatment, they have mentioned there is no accounting issue here. But of course, as I said, you can mention Ind AS 37. Okay. There is no legal obligation to pay. But the reason for not giving the bonus is the ethical consideration which you need to consider. Okay. Because you are not giving bonus. Why? Because if you don't give bonus, profit will increase. CFO's bonus will increase. That is why you're not giving the bonus to employee. Okay. So what is the ethical issue here? Here it is morally incorrect and employees' morale will go down. Okay. The CFO statement that non-financial data is not read by anyone is incorrect. He must exercise due diligence. He must act in public interest and uphold the professional standards and act in a manner with ethical principle. So basically this whole answer is not based on any specific clause or not based on any specific fundamental principle. It is a generalized answer, you can say, because here there is no violation of Ind AS also. So if this type of question comes, even in professional misconduct, there is no professional misconduct mentioned here. But even if you want to mention, you can mention because he is in service. You already know clause 1 part 2 second schedule. Simple. Okay. Even if you want to mention, they have not mentioned, but of course it becomes difficult to ratify where to give, where to not give. So even if you want to give, you can give. But here, when you talk about ethical issues, please talk about the moral responsibility of the CFO. Okay. Chalo. So I hope this is clear to everyone. This question, a good question, you can say. Okay. Chalo. Let's read illustration number 8. What does it say? Agastya Limited is a listed company engaged in the manufacturing of automotive spare parts. The company is preparing the financial statements for the year ending 31st March 13. The directors of Agastya are entitled to an incentive based on operating profit margin of the company. So again, profit linked to incentive linked to profits. You have been appointed as a consultant to advise on the preparation and the following issue. What is the issue now? See, so you are the consultant. Whenever you are a consultant, that means you are in practice. Okay. The draft financials include an amount of 75 lakhs given as loan to director. So whenever it is given as loan to director, it is a liability. Okay. The loan has no specific repayment terms. It is repayable on demand. The directors have included such loan under cash and cash equivalent. This is so wrong, na? Okay. See, what comes under cash and cash equivalent? So whatever is the bank balance, cash balance, and savings account balance, that comes under CC. Apart from that, even bank OD comes under CC. But any loan will never form part of CC. CC means cash and cash equivalent. Okay, so of course it is wrong. They have reasoned that such loan, which is advanced to one of the directors, is repayable on demand. Okay. And would not be a they have reasoned that such loan which is advanced to one of the directors is repayable on demand. It is readily advisable, it is readily convertible to cash. Further, directors opine that such presentation would not be a problem under Ind AS. Okay, so required ethical and accounting implications. So now what Ind AS will come here? First of all, you will mention, you can give the reference of Ind AS 7 because cash and cash equivalent is defined in Ind AS 7. Okay, so you can mention that it is not cash and cash equivalent as per Ind AS 7. Second thing, because you are giving a loan to director, even Ind AS 24 will come into picture, related party disclosures, because director is a related party. So if you give any loan to director, you have to report as per Ind AS 24 also. So that to Ind AS will come. Okay, then we will see the further things. So accounting treatment as per Ind AS 7 loan to directors classified as CC, it is incorrect. Okay, it is a financial asset basically as per Ind AS 109. Financial asset for the company. Why company? Company is giving the loan, na? So for company it is a financial asset. Then as per Ind AS 24, it is a related party disclosure. Okay, which is required. They have also mentioned some conceptual framework things here, that you have to report this to give faithful representation. So there is a chapter known as framework, conceptual framework. So in that there is that whenever you give any loan to your own employee, you should disclose it somewhere, because that will lead to faithful representation. If you're not disclosing it, you will violate these things. Okay, now what is the ethical issues? So there is no fundamental principle violated here, but they have mentioned that you have to get the FS rectified. If you have shown it as a CC, you have to get the finance statement rectified. Second, you should guide the directors about the Ind AS and correct treatment. Okay, so generalized treatment which is given here, not the ethical principle violation is given here. Okay, and what is the misconduct because you are in service? 6, 7. Part 1 second schedule. So if you see 5 and 8 is missing. Okay, so if you read the ethics properly, you will be able to interpret when which clause comes. Okay, but always remember between 5, 6, 7 only some clause will be mentioned. I hope this is clear to everyone. Okay, chalo. See, I'm trying to do my best in terms of the ethical part of it. The accounting part, of course, I'm strong, but the ethical part also you need to keep on reading the questions multiple times so that you are very much comfortable with that. Okay. Chalo. See, to be very honest, even if this comes for 5 marks, it is bonus for you. Why? I have given the sequence of answering: accounting treatment, ethical issue, and professional misconduct. Okay, when you answer in this format, now out of 5 you will get 3, 3.5, 4. That is more than sufficient for us. You can never score 5 out of 5. Apart from 3, chalo, if you are answering properly, you might get 4. For that 1 mark, why you need to do that so much effort? Na? At least 3 marks are sufficient for us, right, sir? Chalo. Anyways, 4, 5 marks it will come. Let's proceed further. Next part. Only 2 illustration left, then it will be over. Okay, please have a look here. Illustration 9. As at 31st March 14, Mitra Limited had a plan to dispose of its 75% subsidiary. See, whenever you have a plan to dispose of your subsidiary, it will form part of disposal group as per Ind AS 105. You remember 105? It is non-current asset held for sale and discontinued operation. So basically in this, if you have a non-current asset which you are going to sell in the next 1 year, it will come under 105. And if you have a disposal group which you are going to sell, disposal group means a group of asset liability which you are going to dispose together, that will also come under 105. And whenever thinking of disposing a subsidiary will meet the criteria of disposal group. So it should be classified as per Ind AS 105. Okay. The plan had been approved by the board and was reported in the media as well as stock exchange when Mitra Limited was listed. It is expected that JR Limited, the non-controlling shareholder in Dosti Limited, holding 20% stake, will acquire 70% interest as well. Okay. The sale is expected to be completed by October 2014. So I guess it will get over in a period of 12 months only. So of course it is meeting the criteria of 105. Dosti is expected to have substantial trading loss. Okay. Mr. X CA, who is an employee. That means he is in service. So we know which clause to quote. Anyways. in the finance department wishes to show the dosti as held for sale in the financial statement. So the employee is correct on his part. And to create a restructuring provision, see, whenever you are disposing your group of asset liability, that means you are going to do restructuring. So even Ind AS 37 comes into picture. So what Ind AS 37 says, whenever you are going to do restructuring, you have to create a provision for restructuring. Okay, not everything will come in that provision. Whatever are the directly attributable expense of that disposal, that expense will form part of your provision. Okay, so the employee is giving a correct recommendation to show it as held for sale and to create a provision. However, the CEO does not wish those three to be categorized as held for sale. Okay, so CEO does not want it, but the employee is right in his part. Let's see. The CEO is concerned as to how this may affect the sales and would surely result in bonus targets not being met. See, he is not the right person. Na? Anyways, he has argued that as the management, it is his duty to secure high sales price to maximize the return of shareholders. He has also hinted Mr. X. Mr. X is the chartered accountant. Na? That his job could be at stake if the provision were to be made in the financial statements. He's threatening that chartered accountant, that CEO is threatening the CA that your job is at stake if you show all these are held for sale and if you show the provision and everything. What to do? So, the expected cost of the sales are as follows. So there are 4 costs given. Out of this, the first and the last won't form part of a provision. Only the directly attributable expense relating to the restructuring will form part of provision. So these are 2, legal cost and the redundancy cost for these employees. Okay, so these 2 will form part of provision. So why impairment loss will not form part of provision? See, basically, when you are measuring under 105 as carrying amount and FELCTS, this impairment loss will form part of year. It will be considered when you are computing the carrying amount and FELCTS. But when you are computing the provision of restructuring, it will not be considered. Do remember that part. Now, 2 things are asked. Discuss the ethical accounting treatment and discuss the ethical issues. Okay, but we bifurcate into 3 parts now. So what are the 3 parts? First, accounting treatment. Yeah, there are 2 indices which are involved. Okay, first is Ind AS 105. You will classify as held for sale. You can give the criteria also for held for sale. Huh? We have 2 conditions when you will classify as held for sale. First, when you notice available for immediate sale in its present condition. Second, when the sale is highly probable. Okay, and in this we have 5 conditions. If you read 105, you will be able to recall it. Don't worry. See, it's okay if you're not able to recall some of the indices. It is okay. You are a human. You're not expected to recall everything now. But of course, in exams, you will be able to recall. Don't worry about it. Okay. So 105 we have given. Then subsidy to be disposed should be classified as disposal group held for sale. We should also present separately as discontinued operation. Okay. And because it is under 105, we will measure at carrying amount or FELCTS, whichever is lower. 105 part we have done. Then the next part is Ind AS 37. You will make a provision, as I already mentioned, of these 2 amounts. Future operating loss and impairment loss won't form part of your provisions. Okay. Next, professional misconduct. If CA falls under the undue influence, this is a violation of clause 1 part 2 second schedule. Acha, I missed out on this ethical issues. What are the ethical issues here? His professional competence is compromised. Okay, and from CEOs also, misrepresentation threatening to dismiss CA from job is unethical for CEO also. A CA should approach CEO and make him understand. Remember, if someone is pressurizing you to breach, you should first talk to him. Remember, your parents are forcing you to get married, so first talk to the parent only, then talk to the superior. Not listening, talk to the TCWG and everything. Talk to colleagues. Remember that you can give that knowledge here because you are being pressurized here. Okay, and because you are in service, clause 1 part 2 second schedule. I hope I have given a good background of everything. Okay. Last question. Illustration number 10. A very simple question, nothing is there. Let's go through it very quickly. Shastra desires to upgrade its production process, and the directors believe that technology-led production is the only way that they can remain competitive. On 1st April, company entered into a property lease arrangement. So again, a lease is coming. Okay. In order to obtain tax benefits, the draft financials do not show a certain lease liability. So remember, whenever you take anything on lease, you have to show ROU and lease liability. They are not showing it. Next, the financial controller, CA Sunil Raghavan. So joined Shastra. He joined Shastra means he's a employee in service before the financial ending 31st March 16 and was engaged in the review of financials. Okay. To begin making a loan application. CA Sunil Raghavan believes that lease arrangement should be recognized in balance sheet. So I guess CA is correct. However, MD disagrees. So of course MD wants to take a loan. Na? So if you show ROU to lease liability, your liability will increase. So loan, it will be difficult to get a loan, na? That is why. Now no need to read everything here. Discuss the potential ethical conflicts and guide the controller how should respond to the situation. So again, yeah, the accounting treatment is simple. 116 is getting violated. Mention as per 116, you have to create these things. Ethical issues, if that CA Sanjay is the CA Sunil Raghavan does not comply with the provisions, ethically he will face the issue of integrity, objectivity. Okay, and then misconduct because he is someone in service. Clause 1, part 2, second schedule. Simple. Okay, so these are the 10 questions which are there. I have tried to give a good overview of this whole chapter, okay, in a short span of time. Okay, so what we have covered is the concepts briefly, the questions, and the best part about it is the summary. No one is going to give you the summary. Even if you try to prepare, it will take a very good amount of time. I have invested that time on your behalf. It took me approximately 2 to 3 hours to prepare the summary. Okay, very quickly I tried to summarize everything. Okay, so I hope this summary was at least helpful for you. Theory chapters are something which you also know that you have to put in the effort, but I've tried to minimize your effort. Okay, so I hope this session was helpful, guys. If at all it was helpful, you're welcome. Okay, so on that note, we will wrap up the session. So thank you so much, everyone. Bye bye, everyone. Take care, and please do give these questions a read as well. Okay, so thank you so much. Bye bye, everyone. Take care. See you all.